Okay, so welcome back to another episode of Banking Without Borders. We've got a lot to discuss today. First up, PayPal. Now, they almost took 10 billion euros from their customers in unauthorized direct debit payments. How the hell does that happen? I don't know, but thankfully German banks intervened and stopped them. Speaking of Germany, we'll be discussing N26, who are currently undergoing a coup with their co-founder and CEO being pushed out. Starling Bank, they've gone and acquired a startup called Ember. They're an accounting startup, and they obviously got upset because we keep calling them stagnant. So now they're trying to innovate and be creative, and they've bought themselves a new business. Also, the British high street is starting to look more and more bare, with 1 in 3 bank branches closing down. They are literally closing faster than Blockbuster in the noughties. And finally, Revolut are going into Africa, starting with Morocco, or at least they're going to attempt to get licensed as a bank in Morocco. That is a really interesting move. But first, Jan, I'd like to talk about PayPal because this is staggering to me. How on earth did they almost take 8.4, I believe, or 8.6 billion euros from their customers?
It's scary if you ask me, Johnny. What essentially happened was that PayPal's internal fraud detection system malfunctioned, and instead of filtering out bad requests, what it's normally supposed to do, it pushed out millions of debit requests without valid SEPA mandates into the SEPA rails. And
wait, what?
On the surface,
Wait, no, you have to explain SEPA mandates.
So SEPA stands for Single Euro Payments Area, right? Essentially, contains all countries that have the euro and some others, and that's used to handle payments within the Eurozone and some other countries as well. If a bank initiates a direct debit, needs to be backed by a valid mandate. And that's essentially just a proof that it's legit. Some sort of insurance, one could say. What happened was that PayPal sent out lots of direct debit requests. And I mean lots, right? Worth 10 billion euros combined, essentially trying to charge their customers' bank accounts in order to fund their PayPal accounts. And it wasn't supposed to be like that. There could have been, 10 billion euros worth of damage.
Yeah.
Those direct debits, they can be reversed, but it typically takes some time. And if you're maybe not so well off financially, it can be quite an issue.
Yeah.
If all of a sudden a few hundred euros or maybe thousands are missing from your normal bank account, and you have to wait a week or two to get it back, can put a lot of people into trouble. So. Yeah.
And it comes off the back of PayPal's reputation just gradually diminishing. I mean, look at their share price, for example. They're not very well regarded as a company that you'd want to invest in right now. And generally, they've got a pretty awful reputation. The thing that you mentioned that is so frightening is the people that could have potentially had the money removed and not been able to pay for like everyday stuff as a result. And how long would it have taken for that money to be recuperated? It's quite shocking, really, when you think about a company that's got to be 20 plus years old, still making mistakes like this. It just goes to show really just what a honestly pile of crap. I personally dislike PayPal, but honestly, what a mess it is as a company.
Yeah, I dislike them too. And as mentioned initially, it's quite scary, but that's why these security mechanisms are in place. PayPal, they do gotta get that in order, to be honest. And I think it's not the first time that they've gotten some bad PR in the last few years.
Oh, yeah. I mean, so much bad PR. We don't need to go into too much detail, but like, are you familiar with Honey, the coupon scanning application or extension that you could have in your Chrome? And they were essentially catching the affiliate revenue from creators by basically embedding themselves into the affiliate link at the last minute. It was really awful, nefarious behavior, like just basically stealing money from creators, which they certainly didn't deserve. To be honest with you, Jan, maybe one day PayPal will cease to exist. Most companies tend to cease to exist eventually, but I think PayPal could be one of those companies that could be like, you almost think of PayPal as too big to fail, possibly at one point. But now I just think that possibly their lifespan is running out. And do we even need PayPal? I don't think so.
Well, I don't personally, but it's another story.
But good for the German banks. For the German banks.
Speaking of German banks, Johnny, there was a leadership shake-up at N26. N26 is the largest German challenger bank, one could say. They were on par with Revolut for quite some time. I believe until late 2020, they had almost the same amount of customers. They were growing really nicely. Germany, Starling, when people thought of digitalization in Germany, they thought of N26. They claimed to be the huge challenger to rival all of these existing banks. And they were doing really well for a long time. They've started messing up some stuff in regards to their anti-money laundering controls. And they were fined by the BaFin Germany's financial watchdog, and they've been under heavy regulatory pressure ever since. They weren't even allowed to onboard new customers anymore, or was like quite limited. So essentially what's happening now is that one of the founders, Valentin Stauf, is likely to leave the company because there has been so much tension over the years between the founders and the investors. Investors, they do want more professional governance, and the founders, they kind of, I think they hold about 20% of the company currently still, and they have special veto rights over big decisions. And investors are not happy about that. So what N26 is doing now is they're bringing on Andreas Dombret, which is actually the former head of the German Bundesbank, which is Germany's central bank, to share its supervisory board. That guy obviously is really good in banking supervision, right? He has been doing that for a long time on the highest level possible. And so that's exactly what the investors in the N26 are currently looking for. Someone who brings in this level of stability and hopefully, evens the path for future growth as well.
I know they had a shot in the UK for maybe a year. I can't recall how long it was. I think it was back in 2020, 2021. They eventually had to close down their UK operations. I really like the offering that N26 have, and it really felt like a direct competitor for Revolut. Revolut are still led by Nikolai Storonsky and Vlad Yatsenko, and they've seemed to been able to make it work and to drive it forward, whereas N26, it looks like their co-founders will no longer be the driving force or the leadership of the company, which is interesting. And I know this happens quite frequently with startups across different industries, whereby like the original entrepreneur startup founder has to step aside eventually because there's just a different level of leadership required at that scale in terms of governance. And investors prefer someone who's experienced as a CEO rather than someone who's never done it before. But I really hoped N26 would be a great challenger for Revolut. Potentially hoped as well that they'd make it back to the UK. But this could be a big turning point for them, Jan, and it could change the trajectory of the business entirely.
Yeah, it could. And to be honest, Johnny, me being German, I obviously hope for them to succeed. I mean, it's obvious, right? But it's as you mentioned, this shift from being a founder to becoming a professional manager, that's quite a challenge. And a lot of people fail in that.
Well, I'll just take Starling Bank, for example. This isn't just an attempt at a segue, but Anne Boden, she'd worked in banking all her life, and she stood down as the CEO of Starling Bank, possibly to do with the fact that they'd cocked up a few things in terms of like the bounce back loans here in the UK. There was a couple of regulatory problems happening, but she stepped down, Jan, and I just don't think she could handle it either. But has it helped Starling Bank? I don't know. That's up for discussion, because as we've seen over the past couple of months, over the past year, they haven't really made any moves towards trying to expand, trying to reach more customers. And it would appear that they're actually trying to build their business banking arm more than their personal banking arm. And this is most evident by their recent acquisition of a bookkeeping and accountancy startup called Ember. This is a really interesting move, and for a number of reasons. But Ember is basically a software like QuickBooks or Xero that you might be familiar with, Jan. Most people in the UK will be. They offer a software, but they also offer access directly to accountants. And they have like a subscription model, and they serve customers at Revolut, HSBC, Lloyds. So they're working with a number of banks, but now Starling Bank have acquired them. They will be exclusively embedded into Starling Bank, and customers using Revolut, using HSBC that currently use their services won't be able to access them anymore. That's one reason why I think maybe Starling Bank have acquired Ember, because a lot of those customers might go, well, I want to use Ember, but I don't necessarily care too much for HSBC, and I'm being told that now I can't use Ember. There might be customers out there that will go, well, Ember's available at Starling Bank. Maybe I'll shift my business banking over to Starling, because they do have a pretty compelling proposition. So this could be a means of trying to reach more customers. Possibly one reason, but there are many other reasons for acquiring Ember. And one of them is because of something known as making tax digital. Here, Jan, in the UK, sole traders and I believe landlords will have to submit quarterly tax reports in 2026, and you'll have to use authorized software by the government, Jan. And one of those pieces of software is Ember. So that could be also really strong and compelling for business banking for them, for their current customers, and also for attracting new customers. Starling do have like a free tier, Jan. They also have something known as the Business Toolkit, which is like £7 for business banking, but it's really basic. You'd probably still need QuickBooks and Xero. So by getting Ember into the system as well, that £7 tier, they could probably charge more for it as well. I mean, Ember, I think, have like a £60 subscription per month, maybe even and it goes up to like £160 per month. So we're talking about like a really advanced accounting software. So I can see like Starling possibly like looking to charge their customers like significant amounts of money to have access to some of that.
Yeah, sounds like a really clever move, Johnny. Maybe that will even a path for future growth for them.
What we're seeing here in the UK is quite interesting as well, is that there are a lot of bank branches closing down, Jan. I mean, I know you don't spend a huge amount of time in Germany, but are you seeing this across Europe as well, with these legacy incumbent banks closing down their branches?
Yeah, I believe across the world even. For sure in Germany, if I think back, I grew up on a village, right? There used to be 2 banks in there. Now there's none. We're seeing this trend across the country and across the continent, I believe. And that's mainly due to challenger banks like Revolut, Starling, N26, and a lot of people that used to use these legacy banks and use the branches of these legacy banks. They're primarily older people, and it's a sad reality, but those guys, they just die, right, at some point, and there's just no demand for branches anymore. When was the last time you've been to a branch personally?
I mean, probably minimum 5 years ago, and it was probably just to pay cash in, possibly cash that I was gifted as well, typically for Christmas. It was either cash or a check at Christmas, still is today, so that's usually why I visit. 34% of UK bank branches in the last 5 years have closed down. But what they're doing is they are essentially consolidating into these banking hubs, Jan, which are actually run by the post office here. I think this is quite good. I think this is as good as we need. And it possibly gives people that lose their jobs as a result of these branches closing and a place to live. A place to live? You got to live in the hub. You got to live in the post office, surrounded by parcels. No, a place to work, which I think is possible. But that's the thing, Jan, that it's sad, really, that a lot of people will probably lose their jobs as a result of this. But also at the same time, like, you just got to wake up to the fact that if you work in a branch, your job lifespan is probably running short, and that you need to think about what you're going to do.
Yeah, but it's quite sad for the customers as well, at least for some, like the people that really depend on these branches, because they just can't access online banking for some reason. It's just what's happening, right? It's a logical trend. Digitalization is growing. We see it in other industries as well. What do you want to do about it?
And the banks are reportedly redirecting the cash into digitizing or improving their digital offering to compete with the likes of Revolut, Chase, Monzo. I mean, look, I've used some of these legacy bank apps, and honestly, I don't see how they're really investing that heavily into the infrastructure or the UI, or, you know, the intuitiveness of their apps. A lot of them are so clunky and awful that you think, well, are you really taking those savings and pumping them into like having a better digital first offering for your customers? I honestly, I'm not convinced by that. Talking of digitalization, Jan, Africa, a continent where some people don't have roads. They don't in some cases, or I mean, in some cases, people don't have access to water. But soon, Morocco or Moroccans may have access to Rev points, which is fascinating. So Revolut have applied for a banking license with Bank Al Maghrib. That's Morocco's central bank, pronounced awfully. If approved, which we'll talk about the likelihood of that, given that I think it's been 10 years since they approved a foreign bank for a license in Morocco. Why would they go to Morocco first?
Yeah, it's a good question, Johnny. Morocco is obviously a very touristy country. Gets about 14 million visitors annually, mainly from Europe, people who already use Revolut cards abroad to pay there. And then Morocco has a lot of Moroccans live abroad and typically send money back home to their relatives and friends on a regular basis, and that's why Morocco is one of Africa's top remittance destinations. And I believe over $10 billion are transferred to Morocco annually. And Revolut, who also has an international money transfer product in place, obviously wants to target that market more directly, maybe. And then, also Morocco is a country where banking typically happens in the traditional way, right? Mainly with banks, not a lot of digitization. And that's obviously huge leverage for a challenger bank like Revolut, who have mastered the digital banking, one could even say. Like Revolut's app, Johnny, you know it as well as I do. It's one of the best on the market, if not the best. And then bringing something so advanced to a market like Morocco, where other banking apps just lack usability in comparison, it's a good idea.
It's a great idea in theory, Jan, but what is the likelihood of them actually getting authorized? I don't want to make assumptions, but I'm just going to because it's fun. I'm going to assume that in Morocco, there will be people lobbying against this, like old financiers, central bankers, people that rely heavily on banking as a business. They make tons of money, tons of profit, and they're going to have brown paper bags stuffed with cash that they can just hand over to the central bankers and go, hey, don't let this bank be authorized. Don't authorize Revolut because they're going to steal our market share.
I mean, I could see this happening out of one reason. Revolut is just bigger than any other Moroccan bank there is right now. Revolut, I believe they have a market cap or they now achieved a market cap of $75 billion with their latest funding round in July, and Morocco's largest bank has a market cap of, I believe it's $15 to $20 billion. They're just much bigger, right? And if existing banks can do lobbying work, I believe Revolut can do too. Revolut is not this small challenger bank anymore, but they're a huge player. I believe if they received their UK banking license, they'd probably be UK's second or third largest bank.
I understand that they've hired an exec from Uber, which is quite interesting to me, to run this operation from Casablanca.
For me personally, it makes a lot of sense that they hire someone from Uber to handle this because, Uber was in a very similar situation when they first launched in Morocco, right? There was the taxi lobby, lots of lobbyists, the taxi business. And I believe in order to run a taxi service in Morocco, you probably have to be licensed in some way. So the situation that Uber was in when they first launched in Morocco and in other markets was probably pretty similar.
Let's have a quick chat about the European Union, the UK interest rates. Jan, do you want to just round up the EU rates first?
So not a lot has happened. That was mainly due to the fact that the base rate was not reduced. There is Bank, which still offers 2% across different markets. It's an easy access account, and you get the option to receive up to 3.01% by saving in US dollar or British pounds. There's N26 that offers 2%, but only for metal customers in certain markets. And that interest rate is ECB linked. So whenever the ECB rate is going down, that interest rate will go down as well. Trade Republic, same situation here, 2% available across different markets in the EU. It's also ECB linked rate, an ECB linked rate. And then we got Klarna, which went down to 1.8% from 1.9 on flex accounts. In most markets, this can vary by market, as I mentioned. So always good to look yourself wherever you're based and have a comparison. Revolut still offers 2.25%, also depending on the market. And as mentioned before, interest rates, they do vary significantly by country and customer profile as well. And in many regions, these providers don't offer the most competitive rates. So what I would suggest is compare the interest rates that I just mentioned with the interest rates of existing legacy banks in wherever you're based, and then make a very informed decision based on that.
And in the UK, the Bank of England reduced the base rate. It's now 4%. So we did see a bit of a shift in the rates and also some new providers and banks coming into play. Chase UK still remain at the top with the best easy access count, 4.75% now. That is for new account holders. A lot of people watching this probably already have a Chase UK account, but if you don't, that's available. It's a really solid rate still, given that the base rate is 4%. 4.75% is extremely good. Kahoot, owned by Santander, also have an easy access account, which is 4.4% now. That dropped from 4.5 after the base rate changed, which is still pretty good. We've got some notice accounts, which have, pretty solid rates. GB Bank have a 4.58% notice account. That's 120 days. Stream Bank have a 90-day notice at 4.45%. These are pretty good. And then we have the Jamaican National Bank coming into play. The JN Bank have a 1-year fixed at 4.39% and a 2-year fixed at 4.41%. Then there is also a cash ISA from Plum at 4.35%. Yeah, cash ISAs have taken a bit of a hit recently. Plum is the current market leader for cash ISA. So that's all we've got for today. Thank you very much for tuning in and watching another episode. Let us know what you think about some of the topics. Do you hate PayPal as much as me? I'd love to hear from you.
Thanks everyone for listening. It's been a pleasure as always. See you in the next episode.
Thanks for the outro, Jan. Goodbye.